down about 70% from its recent high hit back in March.
We also have pulled back about 78.6% from its recent high.
A spectacular stock drop of more than $60 billion in market capitalization, from one of this year's best performing stocks to the tail of all indices and sector stocks. This is the story of Supermicro Computers, which is now facing lawsuits, allegations of possible accounting manipulation and fraud. What's behind the company's already 81% plunge since March, and what role did yesterday's quarterly results play in that? Let's take a look. Hi investors, this is Milan from 𝗕𝗂𝗋𝗕. None of the information in this video is investment recommendation. Always do your own detailed analysis. Investors in Supermicro Computer continued to sell off last Friday, leading to another 11% drop in the stock and a full week 45% sell-off after the data center company lost its second auditor in less than 2 years. The company's shares closed at $26, erasing all of its gains for 2024. Shares hit their high in March at just under 119, at which time they were up 400% for the year. They are now trading at 2.9. Earlier that month, the stock was added to the S&P 500 index, giving Wall Street investors a ride on the company's growth, which was driven by sales of servers equipped with NVIDIA's artificial intelligence processors. But everything doesn't last forever, and that was borne out for this company. Supermicro Computer's spectacular plunge since March this year has wiped out about $60 billion in market value and put the company at risk of being delisted from the Nasdaq. On Wednesday, as the stock was in the midst of its second worst day ever, Supermicro said it would provide an earnings update on Tuesday, yesterday, regarding its most recent quarter. How did the results turn out? There are many other interesting videos on YouTube 𝗕𝗂𝗋𝗕 about stock market happenings, so subscribe and ring the bell so you don't miss the next one. The company's shares fell 17% in yesterday's aftermarket after sales missed estimates. The forecast was weaker than expected, and the company said it didn't know when it would report its annual results for the most recent fiscal year. Supermicro said it had net sales of $9 billion to $6 billion for the quarter ended September 30. While that's below analysts' expectations of $6.45 billion, it's still a 181% increase year over year. Supermicro's forecast for the upcoming quarter was also below estimates. The company said revenue would be between $5.5 billion and $6.1 billion, below analysts' average estimate of $6.86 billion. Adjusted earnings per share will be 56 cents to 65 cents. Analysts had expected earnings per share of 83 cents. The company's recent troubles date back to August, when the company said it would not file its annual report with the Securities and Exchange Commission, SEC, on time. Hindenburg Research disclosed its short position in the company and wrote in a report that it had identified new evidence of accounting manipulation. The Wall Street Journal later reported that the Justice Department is in the early stages of an investigation into the company. SMCI announced Wednesday that Ernst & Young had resigned from its accounting firm just 17 months after taking over from Deloitte & Touche. The auditor said it was not willing to be associated with the financial statements prepared by management. On Tuesday's call with analysts, the company said it would not discuss any issues related to Ernst & Young's decision to step down and did not address corporate governance issues. CEO Charles Liang said Supermicro is actively working to hire a new auditor. The full summary of the results and a link to the presentation is available to all 𝗕𝗂𝗋𝗕 Black members in the event details on 𝗕𝗂𝗋𝗕. A Supermicro spokesperson told CNBC that the company disagrees with Ernst & Young's decision to resign and is working hard to select new auditors. Supermicro does not expect the issues raised by Ernst & Young to result in any restatement of quarterly financial results for the fiscal year ending June 30, 2024 or prior fiscal years. Analysts at Argus Research on Thursday downgraded their medium-term rating on the stock, citing a note from Hindenburg reporting on the Justice Department investigation, which analysts called a material matter. Argus's concerns go beyond accounting irregularities, and the firm suggests the company may be doing business with troubled entities. The DOJ's concerns, in our view, may relate primarily to related party transactions and the possibility that SMCI products end up in the hands of sanctioned Russian companies, the analysts wrote. Every member of 𝗕𝗂𝗋𝗕 Black has access to information about results, plus a link to company presentation. In September, a month after announcing the delayed filing, Supermicro Computers said it received notice from Nasdaq that its delayed quarterly filings meant the company did not meet the rules for listing on the exchange. In response, SMCI stated that Nasdaq rules give it 60 days to file a report or submit a plan to regain compliance. Based on that time frame, the deadline would have expired in mid-November. Although SMCI hasn't filed financial reports with the Securities and Exchange Commission since May, it said in its August earnings presentation that its revenue more than doubled for the third consecutive quarter. Even as the company struggles with numerous issues, its stock has been so hammered that some analysts believe it could rebound. But the vast majority advocate a strategy of just holding the stock and waiting it out. US companies may do well thanks to Donald Trump's win, but if SMCI continues to be in its current troubles, it may not happen. As a result, the company, whose stock saw a 10-1 reverse split in early October, continues to get lower and lower. Not surprisingly, investors don't want to identify with a company that may be falsifying financial results. Do you believe in a turnaround, or are you not buying this company's stock? Share it in the comments. Also, check out our last video where we broke down the topic of the US election and its impact on the stock markets. Good luck with your investments.